Yo, what's going on everyone? This is going to be a recap for Tuesday, December 16, 2025, and I'm going to show you how I made 5 grand trading gold today. I'm switching up the background today. Typically, I'm always rocking some color in the back, but I want to see how it is just black. Before we get into it, this trade was executed live on stream. I'm streaming every single day right here on YouTube at 9:15 a.m. Eastern, and we have been on one, my boys. I have not even had not even a single losing trade in like 2 weeks or something. It's been green every single day. Every single trade has been a dub. And the last thing to wrap up this intro, don't forget to use code LOOP at your favorite prop firm for the best available discount. So with that being said, let's get right into this. I always start my day with top-down analysis. I traded gold today, but before that, I was looking at NQ. I was looking at the NASDAQ, and the price action today was super mid. Like, look at this. Look at this back and forth movement. And this is on the 15-minute. We had a bunch of accumulation. We take a look at some of the lower time frames. We could drop down to a 5-minute. Look at all these wicks. Pretty nasty stuff. And so I identified that the conditions were not the greatest for NQ. So I took a look at some of the other indices. I took a look at ES. ES was similar in that the delivery was just not that great. I didn't see any of my models, any of my setups form. Go to YM, same exact thing. Because I'm able to identify that the conditions were just not good for me, I was able to save myself from taking any unnecessary losses. I refuse to force any trades in this type of price action. I refuse to chase, FOMO, do any of that kind of stuff. If I don't have my setup, I'm not taking the trade. With all the indices, really not much for me. So I said, let me take a little look at gold. I saw a potential setup on the lower time frame, so I zoomed out onto the higher time frame charts to see if there was any support I can use, any confluence I can use for that lower time frame setup. And I realized that here on gold, here on the 4-hour chart, price was trading in this 4-hour BPR. This is a balanced price range. This is when two imbalances overlap, a SIBI and a BISI. Price was reacting off of this higher time frame premium rate, which is good. This is what I want to see. And one thing about BPRs is that these are some of the most sensitive premium discount arrays. From the 4-hour chart, I then went to the hourly, and I wanted to see, are there any premium arrays? And I saw that we were trading in an hourly SIBI, which lined up with that 4-hour BPR. So across some of these higher time frames, there's some confluence, 4-hour BPR, hourly SIBI. And one thing that I saw that I really liked are all of these unfilled imbalances here on the hourly chart. We have this BISI and we have another fair value gap. Along with the unfilled imbalances, if I use my fib and I mark out the low to the high, I'm able to get equilibrium. This is 50% of this impulse swing, 50% of this range. We can see the price has yet to trade from premium into discount, which is more confluence. So the fact that we have these unfilled imbalances that line up with equilibrium, with discount, this is letting me know that in order to rebalance, in order to deliver fair value, gold price is going to have to deliver down, deliver lower into discount, into equilibrium, along with filling in and trading into these imbalances. And one of the last things here on the hourly was so good today. Seriously, it was so good. If I mark out this one candle here, we're going to mark out the high and we're going to mark out the low of this candle. I had identified that we had a potential 1-hour CRT short model. To explain my understanding of CRT in very simple terms, what I'm looking for is one candle that has a decent range, a decent body. I don't want to use small body, big wicks. I'm not looking for these type of candles. I want to find a candle that has a good, decent range, a good body size. I refer to this candle as candle number 1. In the second candle, what I'm looking for is, can this candle take out the high or the low of candle 1? And if so, will the second candle close within the first candle's range? If the second candle is able to take out candle 1's high or low and then close within the first candle, I can anticipate that in the following candles, we will seek the opposing side. So in this example, we can see that the second candle took out the first candle's high and then we close within it. So I'm able to anticipate that we're going to deliver lower into the first candle's low. And what does this line up with? The first candle's low lines up with the unfilled imbalance, and just below it we have equilibrium. So there is a bunch of confluence that's building up now for me to anticipate and think that we're going to see gold deliver lower. From here we can head on down to the lower time frames, and what had originally caught my eye was this price action. It may be a little bit difficult for you to identify what I'm talking about here on the 5-minute, but as I drop down to the 3-minute, 2-minute, 1-minute to some of the lower time frames, it's going to become a lot more obvious with what I'm about to discuss. And that is AMD. Accumulation, manipulation, distribution. I said, hold up, wait a minute. We have some potential lower time frame accumulation. We then have a liquidity sweep, a stop hunt. This would be classified as the manipulation. And then the third stage is your distribution, when the real move delivers, and we seek the opposing liquidity. So if this was an AMD sell model, we have a bunch of targets to the downside. We have our equilibrium, so our higher time frame 50%. We have the unfilled imbalances, and we have the hourly CRT. And then we're gonna see so much confluence across all these lower time frames, starting with the fact that price had some displacement to the downside. This created a bearish change in the state of delivery, which formed a 5-minute bearish order block. Within these two up close candles, which is the bearish order block, if we look right to the right, that's a little tongue twister. But if we look at 10 a.m., what do we have? We have a 5-minute imbalance. We have a 5-minute SIBI. Your high probability order blocks will form when there is an imbalance, a fair value gap within it. So I was licking my lips when I saw this on the 5-minute. And from here, we can take a look at the 3-minute chart. Here on the 3-minute, that AMD becomes a little bit more clear, a little bit more obvious. We have that accumulation, the back and forth movement. We have the stop hunt, the liquidity sweep. This is our manipulation. And then we have our potential distribution. Just like on the 5-minute, here on the 3-minute, we had a change in the state of delivery. We had the formation of a bearish order block. And within this order block, we can see that we formed a balanced price range, a BPR. We have the BISI that was violated, that overlaps with the SIBI. The fact that we had all of this confluence from the 4-hour to the 1-hour to the 5-minute, 3-minute, we had a lower time frame AMD sell model that's forming within a 1-hour CRT, within a 4-hour higher time frame PD array. It's just looking really good for price to deliver lower, to rebalance the up move, trade into higher time frame equilibrium, and fill in the imbalances. The last step, the last thing I was looking for in order for me to short, targeting equilibrium and all the other targets to the downside, I wanted to see could price react off of those 3 and 5-minute premium arrays. Once price rejected these premium arrays, I said it's go time. Here on the 1-minute, we formed another bearish order block. And within this order block, we formed an inversion. And within this displacement, we formed multiple SIBIs. From here, there is just way too much confluence. We got all of these premium arrays on the 1-minute, 3-minute, 5-minute, the 1-hour setup, the 4-hour. And because of this, I entered into a short off of these lower time frame premium arrays. My stop loss, this is my invalidation right here. It was just above the 1-minute, 3-minute, 5-minute premium arrays. If we're gonna deliver lower, we should not be taking out and engaging with this buy side, because if we were to engage with this swing point here, we would be violating all of these different premium arrays. And for my TP, I was targeting equilibrium, which is that higher time frame 50%, which lines up with the 1-hour CRT and the unfilled imbalances. So let's play this out here. We can see that I was in a little bit of drawdown. I was in some drawdown. Now, there is one thing important that I want to talk about. As soon as traders are in drawdown, a large majority of unprofitable traders, they start to micromanage their position. They think, okay, should I trail my stop loss? Should I trail it? Should I cut the trade? Should I add? Should I do this? Should I do that? The best thing to do is to just let your setup play out. Just let your model play out. Let the process. So we'll fast forward some more here. And there's something significant about this delivery, which I'm going to go over right now. So we can see gold ended up getting a nice move down. We literally hit all of my targets. We're going to go on to some of the higher time frames. I'll show you right now. But before that, take a look at this. If I remove everything from the chart and we just see this delivery lower, what I want to point out is the time. We can see that this drop started right at 10:54 a.m. What is significant about 10:54? This is within the 10:50 to 11:10 a.m. macro. This is even more confluence, because when I entered into the trade, I saw the time. I said, oh, we're real close to the macro. This is really good. We're getting our entry a few minutes before the macro. I'm anticipating 10:50 to 11:10 a.m. to send this mofo lower. And we can see that the macro delivered quite beautifully. So let's work our way back up. We can take a look at the 3-minute. What do we see? Beautiful rejection off of that 3-minute order block, 3-minute BPR. We can head over to the 5-minute and we see the same thing. Really nice rejection off of that 5-minute bearish order block, 5-minute FEG, that SIBI. And then we can take a look at the hourly chart. Look how nice this hourly CRT setup played out. We got our candle 1, candle 2, and look what candle 3 did. Where did we deliver down to? The first candle's low. So not only did we have the lower time frame AMD setup, but we had our higher time frame, our 1-hour CRT setup. These are my two favorite models, and the fact that they both align, that's seriously chef's kiss. And then we take a look, what else did price do? We can see that gold traded down. We rebalanced the hourly imbalance. This is unfilled. What do? We filled it in. And we can see that we traded from a premium to a discount. We traded into 50% of this range. Across every single time frame, we'll see price trade from a discount to a premium, from a premium into a discount. It's happening on every single time frame. Overall, this is an amazing day, but don't forget, the most important thing is the narrative. Why should price trade to where you think it's going to trade to? Once you develop a narrative, all of the PDRA should just act as the framework to get to your destination. So if you made it to the end of this recap, thank you guys so much for watching. Don't forget, you could be joining the live streams every single weekday at 9:15 a.m. Eastern. So without further ado, a like on this video is much appreciated. Share this with all your trading friends. Subscribe to the channel. Use code LOOP at your favorite prop firm for the best available discount, and I will see you guys in the live stream. So until next time, peace.